We're going to go over the previous day's high, low, and close and the importance that will make in our trading decisions. We're looking at a 60-minute chart here. And these blue boxes circle one day. They show the high of the day, the low of the day, the open, and the close. You can draw these on your own chart to separate the days and then just be mindful of the high that was made during the day or the low that was made during the day. I just have these boxes up to simplify this explanation. The previous day's high, low, and close has the same kind of relevance as the peaks or valleys or the highs and the lows that the market makes during the day. This is because traders, not only ones who trade only the daily charts and are looking to see if the market closed lower than the day prior or made lower lows and lower highs than the day prior, but also because intraday traders are watching these same levels. Let's take a look here. We look at the previous day's close, and that would be here. So we can just draw a line for the previous day's close. And see if that actually holds any relevance today. But you can see that as the market opened around 9 o'clock, the market was almost flat of where it closed yesterday. So what we're thinking is, will this have any relevance on the current trading day? We'll bring into the previous day's high and low into this. Over the last 2 days, we've been making higher high and higher low on the day. So continuing with this trend would mean the fact that we would probably be making a higher high and a higher low today. This held true. Even though the market did dip down and break through the close of the other day, it still did rally back again and ended up closing the day up. What can we take from this? Well, overnight, the market pushed its way up to create a new higher high. So we know for a fact that no matter what happens, that we will have a higher high from the previous day. It's still trying to decide whether or not we will have a lower low, at which point the high and the low would be higher and lower than this previous day. We would take into the same principles and count these both as one day. We'll look back and show an example of that. Right here. We have one day where the market is closing higher and lower than the previous, and this day it closes lower high and a lower low than the previous, followed by a day where it closes with a lower high and a higher low. We would take both these days and count them as one if we were only looking at the daily charts. So when we see a box like this, and then the one following it we see makes a lower high and lower low, we can consider the market to just be consolidating within the daily charts. The day following that, it makes no attempt to push the market down and swiftly breaks the high of the day prior and the high of 2 days prior, which is the reference day, because it has a higher high and a lower low than this box. So once we've already broken the high of this day, it's not a guaranteed assumption, but we can say that we may have broken this downtrend where we have, starting on this day, with a lower high and a lower low, that this day will definitely be a higher high than this box, but it's yet to be determined whether it be a lower low. In the end, we end up closing up with a higher high and a higher low, starting an uptrend. If you drill down into the lower time frames, like the 60-minute, and start circling off the highs and the lows, the exact same thing is displayed. But this is just another reference. We know, just from prior experience, the fact that breaking lows of the day prior or breaking highs of the day prior can both offer areas of resistance. And the day's close is a good reference over how the market may react throughout the day. This is especially true when we get a continued downtrend like this, where we have a high and a low, we get a box with a lower high, lower low. This is followed up again by a box with a lower high and lower low. This means that traders that are only trading large amounts on the daily charts are going to be looking at making short positions because the trend is downwards. The bears are in control of this market currently. So what do we get the next day? We get a lower high and a lower low, followed by another lower high, lower low, lower high, lower low. This is finally broken with this box that has a higher low and a higher high. I know most of you probably aren't trading off the daily charts, but this is still something that you have to pay attention to, or the general trend of the market as the days go by, with lower highs or lower lows on the daily trend. Let's take a look at this daily trend. You can see we have a high and a low, followed by a lower high, lower low, lower high, lower low, lower high, lower low. Lower high, slightly higher low on this day. So it's actually encompassed by this one, and then followed by another lower high, lower low. About the third day in, one of the things that we would be looking for, combined with looking for peaks and valleys, is where the day will make its high so that we can trade short for that day. This is one of the key ways we use the day's high and the day's low to affect our trade decisions. This isn't 100% what we base our trades off of, but it's something that we have to keep in mind to add extra potential to each trade that we take.